20th, we're looking at a daily chart of the euro versus the US dollar. It really doesn't look good. Obviously, we've sold off quite aggressively after it's been indicated that there'll be further easing stimulus measures. Now, normally when a market's this oversold in the daily stochastic, I'll be really positive and saying we're going to look for a bounce. We're holding some decent fib support here at 137, 136.75 area. But the chart in itself, regardless of the oscillators and Fibonacci support levels, doesn't really look very good. We're holding below a trend line. If I just scrunch this up a bit, this trend line goes back to the 6th of September. Now we're holding this trend line. We broke below this trend line last week, and we're holding below it. We're just hovering below. This looks like a continuation pattern. We're just hovering before the next sell-off. Unless we get back above the 100-day moving average at 137.37. We've got Fibonacci resistance there, we've got trendline resistance there, we've got 100-day moving average resistance there. It's not really a surprise that we haven't been able to break above there. Now, unless we do that quite quickly, bears are going to come in and look for a second wave of selling, which would push us below 136.75. Down to the 200-day moving average at 136.30. That's here. If we continue low, we've got 135.90 as a next target, and we could even see these Feb lows down here. Let's see, these are Jan and Feb lows down at 134.77. So the lows for the year, in fact, doesn't look too good for the euro unless we can get a decent close above 137.40 really. A close on the day above there, well, then we could push on up to here, which is 137.97 double O. We've got 55-day moving average at 138.12, so that sort of area is quite strong resistance and probably a decent selling opportunity when you bear in mind we've got a trend line just up here at 138.25 too, so that whole 25 pip area is the next target, but it's also strong resistance and wouldn't be surprised to see that hold. But as I say, despite the fact we're oversold, the chart does still look negative. We'll have a quick look at the 4-hour chart just to see if there's any indication of, well, no, it's just clearly showing us that sideways movement for the last few sessions, but unable to break even the first short-term Fibonacci resistance at 137.30. So it's all looking pretty negative, I do think.